Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Position disclosure. Out of a few things that I've been in for a while, a few of them got to my targets and one more major stop out. Chevron got to my target amount. Amazon got to my target amount. Carvana on the short side got destroyed and got to my target amount. And then I got stopped out of Quad U, which is disappointing. I've been in that for a really long time. And honestly, I had said to myself ever since this peak back here at 27.33 that 27.33 was going to be my new stop loss. I never thought in a million years we'd ever get back there. We had a big bubble in October of last year, and a lot of like meme stocks, pre-revenue stocks. Quad U being one of them. Quad U is a pre-revenue stock. They have their revenue is zero. At this price, it's like an $8.5 billion valuation on a company with no revenue, and it doubled this year. So just all the hype around rare earth and uranium that really brought this thing up. I was just surprised to see how much it outperformed a few of the other names that are similar in the space. But a game plan is a game plan, and traded this thing back and forth for months and months and months, and overall had a lot of spots of great success, and obviously gave back a ton of money in this last move. But followed the game plan and stopped myself out above that high. So I'm no longer in that one. And Amazon, which then is down, but got to my target at 145, 146 area. Chevron, it's been like 170 forever has been my target. I'm out of that thing. I've been in. No, I mean, it depends how you manage. You should know better than to even ask that question, because you see how I trade. So every day that goes by, I'm banking, cash in the position. So, if it goes all the way back up to the price and the stop loss over the course of months, then I, was banking cash in it every single day when it gets up there. So what else was I gonna say? Chevron 170. This has been my target in this thing for a really, really long time. It's gotten close on a few occasions, but hasn't actually breached it since 2023. I've been in this for all these years, all this time. Same deal. Just kind of banking a little bit of cash flow in it every single day, waiting for the bigger picture to play out. I still like it for higher. I think this pattern looks great, but again, a game plan is a game plan. So you gotta be disciplined and you have to follow your game plans. So it's kind of the position update there. As far as today goes, it was kind of a wild one. I guess spies are. How did we even close? Because now we've had a lot of movement after hours. I guess spies closed like flat red on the day. Qs were now they're up as well, probably somewhat similar, and the IWM is down 0.5%. After hours, we've got Meta, Microsoft, Tesla all reporting. The Meta and the Microsoft. So first of all, let me do one at a time. Microsoft's getting the worst reaction of the three, and I think it's the best of the three earnings. It doesn't necessarily matter though, right? It kind of matters. I think that Chris Johnson, Chris J here in the VTF said it perfect when he said, maybe it's just multiple contraction in this at this point. And had a pretty big move over the course of the last 4 or 5 days into it. But the Microsoft report looked pretty darn good to me overall. I see no red flags in it. It's just one of those situations where good might not be good enough. With that said, it is pretty far off highs even going into that. So I thought that the bar might be a little bit lower, but they rallied it up pretty heavily over the course of the last 4 days. So we'll see where that one settles after the conference call ends. Meta is also a really good report. Those frontline numbers there are really good, except I really don't like the CapEx number, and I'm surprised that they're not punishing the stock a little bit more on the CapEx number. The CapEx number is coming in hot compared to expectations, but if you guys remember, Meta was the one that really got punished on its last earnings report for the same reason, and on top of that, Maybe I didn't see the guide. I might have missed the guide. Josh said that the guide was really good. Um, Let me look up and see if I can refind it here. Meta, EPS, Rev. I don't see the guide in here. I thought that the guide on the call usually, but if you have the guide and you could post it, that'd be great. I didn't see those numbers come in, so that may explain that. Otherwise, the numbers. There it is. Thank you, Pat. Yeah, so the revenue guidance, Q1 revenue guidance is a solid beat. So that's what's bringing us up in this. Yeah, for some reason they got it this time on the print. Probably because they knew that the stock was going to get punished for the capex number otherwise. So again, Meta's just a cash flow machine. So they beat on all their top line numbers, and the revenue guidance here is great. That's helping to boost the stock up. Otherwise, I think that they would have punished it from the capex, and it looks like they kind of immediately were going to. They immediately downticked Meta very hard before ripping it back up. You just don't want to see, in my opinion, a massive increase in Meta capex at this point when they're so clearly losing the AI race. That's my thought process on it. But the underlying business is just such a monster, such a cash flow machine, and you see that in the top line numbers, and you see that here in the revenue guidance, and that is worth owning, especially if they ever could taper down the capex spend a little bit. And then finally, Tesla. Tesla very blah because they don't even have a company. But then they announced that they are going to be acquiring $2 billion of preferred stock in XAI. And that's the bull case, in my opinion. That's been the bull case from the beginning. That's the reason to own Tesla, is for the other businesses that Elon is involved in. We've seen Elon do some solid financial engineering in the past. If anybody remembers SolarCity was on its way to bankruptcy. And it was kind of his company, his brother's company, and Elon came in and saved it. And I kind of think that he can do the same thing with Tesla, come in and save Tesla by utilizing XAI, utilizing SpaceX, and kind of creating that combination. And guess what? He's incentivized to do it because he's got that potential of $1 trillion pay package. In my opinion, the only way that he gets any of those tranches on any of that pay package is if he's somehow able to combine in the other businesses, Starlink, SpaceX, XAI, and maybe this $2 billion of preferred in XAI, which I would argue is not enough, that they're going to be buying, is just kind of giving people a little glimmer of what they could potentially do. All the same, Tesla, we'll see what happens on the conference call, but technically the stock needs to get above the 450 to 460 area, in my opinion, to become bullish again. So I think that move is very interesting, somewhat expected. We've got to see what the actual reaction is going to be here, and if it's enough to get it back over that resistance and get it more bullish again. So that is on the earnings front. Back over to the review of the day. So, all things considered, it was a pretty slow day. We had like a day 4 gap up today, and the market's not so extended that it can't continue, but a little bit of rest makes sense. So we were weak off the open. We tried to kind of flag here in the first 30 minutes, but then we broke lower, traded lower. Fed day, not a lot going on mid-day on Fed days. It's very typical. And then the post 2 p.m. movement in the S&P was relatively muted. There was a couple interesting upticks and downticks that occurred, a couple quick flashes in the tape, but overall, I think that this went exactly as expected. The market was fully pricing in that there was going to be no cut. They got no cut. And, Powell just remains the ultimate professional in the face of some hard-hitting questions related to, the current administration and what they're trying to do in order to take away the independency of the Fed. So he was able to do a great job, from what I heard, overall avoiding those questions, and the market ended up doing nothing as a result. I think that we're pricing in like no cut now from March either, but someone should confirm that for me. And that's pretty much it. SPYs and Qs did very little. At the end of the day here, the market technicals for the Qs are still super bullish. The technicals for the SPYs are super bullish. And the IWM a little bit more concerning because you want to see yesterday's low hold as a real pivot low, but not the end of the world. If we're still above like this 261 to 262.50 zone in the IWM, I think it's fine as well. So, we will see what these big earnings reports. I think we've got IBM out today too. We'll see what these big earnings reports from Meta, Microsoft, Tesla end up doing to these indexes. But right now they continue to look really bullish. Next, over to the metals. The strength here in these metals, it just continues to be outstanding. Yesterday, I really thought we were going to break lower, but that the only thing that was holding it back was the weakness in the dollar. Today, we had some more dollar strength, and that was giving me a lot of confidence, especially earlier in the pre-market, that the gap up in SLV and GLD was going to be very, very shortable. And then we got that headline. I took pause when we got the headline that came out of Trump, again on more geopolitical, potential conflict, saying that we're, sending over an even larger fleet towards Iran than we sent over to Venezuela right now, and that they better, come to the table and be careful. So I think that was what helped to boost up, silver and gold in the pre-market. And then, the technicals kind of helped change my thought process as well. I was really getting very bearish at 6 a.m. when we had this downtick through early lows. It looked like we were going to maybe go after $100, which the 99 to 100 on the downside is what I was saying was a confirmation zone that we actually had to break. And then I forget exactly what time it came out, but a little bit later we had that Trump headline, and then it started to break up, and we were kind of breaking back above 103. And it was a combination of the stock breaking higher, so the technicals becoming more bullish, and that headline that kind of made me take a little bit of pause. Things did get exciting with this rollover in $200 here that held, and then they just really squeezed this thing back up into the end of the day. I hope everyone took the time to read that note that was in Pat's note this morning. I thought it was great, just on from UBS here, global economic perspectives on gold. And when you dive into it, it's interesting because basically what it says is all of our typical traditional gold models do not explain gold's performance from last year into this year, and that you have to basically take on a new model that takes into account a combination of tariffs, Fed independence threats, and I thought there was one other one, and basically just geopolitical concerns broadly, which I think could comprise a lot of the other, to kind of see how what's been moving this. And obviously the dollar has had an impact as well, but kind of been a pretty global thing. So that it was an interesting read this morning, and then again you get the geopolitical headline that comes out this morning, and the next thing you know, this stuff ends up being really strong overall. And gold is starting to really go parabolic as well. So it's like silver taking a little bit of a break compared to the high from 2 trading sessions ago, and gold just completely ramping up. I think I haven't done like a perfect study of it yet, but I only kind of compared it to these recent, more kind of parabolic peaks that we had been looking at in gold on the way up, and a couple of those were great shorts. I remember participating for like small trades on the short side, I think on both of these moves, and then on the long side here. And now gold is significantly more parabolic, more extended than it was at the October high or at the April high. But I haven't gone back and measured it off of like the 2011 move, which was a really crazy time for the metals as well, which I did do with silver. And we saw 2 days ago that silver had double the upside extension on a percentage basis from the ADMA 2 trading sessions ago than it ever had in 2011, which is pretty darn incredible. So the silver by the skin of its teeth is still holding that high from 2 trading sessions ago, but if you are still in it and you're short versus that high, which that in my mind that's a stop loss for at least a very large percentage of my position, then you better be holding your breath and saying your prayers, because it got awfully close to that today. We got 25 cents away from that, which is again pretty incredible. Down ticking right now though. I think that's all that I've got. I don't really think I've got anything else to talk about, so I am happy to turn it over to you guys for any thoughts, questions, anything that you want to mention or talk about. From Brian, how long do you expect the rotation trade to continue throughout 2026? So can you tell me a little bit more on what you mean by the rotation trade? Just because there's a couple ways that I can interpret that. There's a few ways in which it's been going on. You know, it's been the IWM versus the Qs. It's been dispersion. It's been maybe a couple other areas that you could argue as well. So, you know, happy to answer the question, but choppy indexes and more broadening out. Sure. So we've already kind of seen that stop over the course of the last couple of days. So what I would refer you to is some of the Goldman Sachs research that's come out in the beginning of the year, especially when we saw the IWM outperform like the Qs, and a lot of money was coming out of the Meg 7 and rotating into the IWM for the first 14 days of the year. So we started the year with a tremendous amount of IWM outperformance compared to like the Nasdaq, and now you're seeing the IWM underperform the Nasdaq. So they're playing catch up. So it's like kind of like they're passing the baton back and forth. Like one keeps taking over from the next, kind of over and over and over again. Sorry, I was just checking on my position real quick. So if you read the Goldman Sachs research, their expectation is basically for that to occur all year, but in the big picture, for them to run kind of neck and neck. So you will get you know, periods where the Qs outperform, periods where the IWM outperforms, and then they will kind of keep switching back and forth. That corresponds with the significantly lower correlation numbers in the market. So I think an important thing for us to be paying attention to right now as traders is just correlation / dispersion. They're kind of synonyms there, or opposites, I guess. The less the correlation, the more the dispersion. The higher the correlation, the less the dispersion. So while correlation remains very low, meaning things are not trading together, dispersion will be very high. What can increase correlation and reduce dispersion is a market-wide sell-off. So I think as a general rule, what we should expect to be seeing in 2026 is that when the market is moving higher, it's moving higher with a lot of rotation, a lot of dispersion under the surface. And when the market pulls back, that correlations really increase and that things start to really trade together. So that would be kind of my expectation for, you know, how 2026 is going to play out in terms of the rotation trade. Appreciate the question. What else? What else you guys got for me for today? Gold not pulling back at all, just silver. You know, that was the big signal to me on a couple of instances today when it looked like silver might break down, was that gold wasn't moving lower. I don't think that we're really going to be able to break silver to the downside without gold participating. I want to see them both selling down together, and we never really got that today. Maybe like a little bit of a start of it happening around like 120 today. You can see silver got hit and gold got hit, and this is the only time I thought there was a real chance. Earlier in the day, I remember this candle in particular here at 10:25. You sold off in silver. You got kind of into the gap fill. You made this bearish consolidation. The bearish consolidation looked like it was going to break to the downside. And I was watching gold at the same time going into this upside grind. And I was like, guys, I don't think that this is actually a breakdown that we're going to be able to push, because gold is grinding up. And it seemed like gold kind of saved the day there. So even now we're getting a little bit of a sell-off here in silver after hours, but gold is not participating in it. So it's hard for me to really believe in it. What else, folks? Anything else? Okay, Matt is ripping now. I'm happy to do a really short one. You know, on the one hand, there was a lot going on, but on the other hand, we were all there for it. So I don't mind doing a short one. I'm kind of beat. I've been starting my days way too early. I was logging in literally at 4:02 Eastern this morning, which is 2 a.m. local. Google flying? That's interesting. How do you set your goals in trading? Is it a good idea to even have goals? What should a newer trader write down in their journal about setting goals? Sure. So first of all, I have a journaling class in my training program. And if you haven't checked that out, I would certainly recommend that you check it out. It's kind of based on the way that I've always done this, a little bit old school, because I started doing journals before any of the fun, journaling software that a lot of people use now existed. But yeah, I'm definitely a big believer in goal setting for yourself. I'm not a believer in stop I think it's a good idea to give yourself a P&L goal, but I don't think it's a good idea to stop when you get to your P&L goal. As an example, I think that a really good goal to set for yourself as a newer trader is a consistency goal. That's probably even more important. I want to be able to be positive X amount of days in a week, X amount of days in a month perhaps. Because the key to success in the business is consistency. So newer traders should focus more on consistency than P&L, because if you can get the consistency, then you can bring in bigger P&L. It's just about doing the same things with larger size and then having the psychological capacity to handle the larger size. So I definitely am a believer in goal setting, and I think that the way that you set your goals, like how do you set them, is based on your previous results. So you start by analyzing what your results are looking like so far, and then based on that analysis, you give yourself goals of the things that you need to work on. I need to do a better job following my maximum loss. I was able to be positive 3 out of 5 days a week on average last month. This coming month, I want to be able to be positive 3.5 out of 5 days. Last month, my average, positive P&L day was $1,500. This month, I want it to be $2,000. Another good one is like your ratio of, and this is an important thing I think for traders to study, what your average down day looks like compared to your average up day, right? And this is also why risk management is so important, and obeying your maximum loss is so important. If your maximum loss is $500 and you never, ever, ever exceed it, all you're going to probably need is 2 or 3 days in a month where you make 2 to 3 grand, and you're probably having a positive month every month. And then everything else can be kind of wish-wash in the middle, where you made $500, you lost $500, you made $700, you lost $500. But if you never exceed what that downside number is, and then you can throw in just a few outlier days a month, that's typically a recipe for consistent profitability. So, that's a good one to give yourself a goal of as well. Can you talk about the psychological size of adding size in a position to be upping size but struggle to do it even though I know I can afford it? Sure. So I would say very generally, we want to increase our size and trade. So first of all, saying increase in size, I think is really the wrong term. It should be increasing the risk, increasing what your average risk looks like in a trade, which will often correlate with increasing size, but not necessarily. So you want to focus on, increasing your risk, especially as you see periods of success. That's a sign that you should increase. I've always been a big believer, though, of increasing your size when you get success, but very slowly. You don't want to be the trader who jumps from making and losing $100 a day to making and losing $10,000 a day, just use an extreme fake example, overnight. Like I was just saying before on Kevin's question, the key is that you want to find consistency and then add scale and have the psychological capacity to handle the additional scale. Going from $100 a day to $10,000 a day, you're not going to be able to do that. It's going to be messing up your mind to just see how much bigger the numbers are on your screen. So if your sizing increases are small and incremental and based on success, the idea is to do it in a way where you almost don't even notice that the numbers are getting bigger, because they're getting bigger by such smaller amounts over time that next thing you know, then you are actually swinging 10x what you were swinging previously. So, hope that helps. From Dennis, I'd go further and don't have any goals like that at all that include money or even ours. Make goals to journal more, sleep better, eat better, work out. Yeah, so I don't agree with you about not having goals about consistency or risk numbers. Like, you need to set yourself goals on based on your trading performance as you review it. I think that's very important. But I also think that including personal goals that will have a positive effect just on your life, which will therefore have a positive effect on your trading, is also really important as well. So, for example, what you just said here, making sure that you're doing your journaling, making sure that you're getting your sleep, that you're eating well, that you're getting your exercise, etc. What else, folks? Anything else? All right. Well, happy to wrap it up with a quicker one then. I'm pretty beat. Have a great night, everybody. I'll see you all tomorrow.